Hi everyone, welcome to EVE Talk, your weekly look at the market in EVE Online. I'm your host, delonewolf, and while of course the war is going to take center stage in today's EVE Talk, and I'll try and look at everything through the lens of what's happening in Nullsec at the moment, there is a little bit of information that just dropped yesterday, I believe, where CCP is planning to give skill points as a reward for basically a daily quest system in EVE a little bit after the Citadel expansion. I need a little bit more time to fully think this item through, to be honest. This is another one where my very first instinct is to say bad idea. Yeah, I thought the exact same thing with the skill extractors and the skill injectors. So who knows, I need to think this through thoroughly before I actually give you guys my analysis on it. But it may play a role in some of the items we check in EVE Talk. So as always, let's get started with plex here, and that's 105. 105, and you can already see from the ticker, whoops, let's go, plex, that they dropped a little bit more, but they are probably starting to bottom out here. So you can see the chart here that since February, plex has gone down from around 1.26 billion ISK to a little bit over a billion, so this is definitely quite a decline. Now there were several sales during this. You can also see that the volumes is up quite a little bit, and of course the start of the decline here and the big volume upshot has been the skill extractor and the skill injector launch into the game, so that must play a role as well. We are seeing that plex are now at around 1,035 million ISK. I think we are starting to bottom out. I don't think a lot of players will let plex dive below a billion, because at that point I think a lot of people will just be willing to buy it straight out again as an investment into the future to protect from inflation. But it is interesting that we are continually seeing this pressure, and this chart of course looks pretty nice. One thing to keep in mind, of course, we are at a pretty low point for 6 months, and so if you are looking to invest your ISK, my personal opinion, keep in mind it's an opinion and I've been known to be wrong in the past, is that this could be a good investment when you're looking at things longer term. This is definitely not something that you'll turn around in the next few weeks or even in the next few months, but if you're looking at an investment to make for 3-6 months, maybe even a year or more, then yes, for plex you are bound to have a really good sell opportunity at some point later in the game, just because inflation is a thing in EVE Online. What I should say is that the idea of giving out skill points as a reward for the daily grind in EVE Online, daily quest, whatever they end up making it, is could add a bit more pressure on the plex market, to be honest, because well, the reason you need plex, of course, is mainly to train extra characters or to train up skill points. That is the one big thing that plex does do over time. If CCP starts to give a second avenue of gaining plex, skill points, then of course there may be less need to actually buy plex to train up your alts and to do things like that. So I do think that there could be added pressure now with the news that CCP is planning to give out skill points for a daily routine. Next up here we get multiple pilot training certificates. Those are actually, strangely enough, bouncing off of the 1,050 million mark. Is that right? Yeah, they're going for 1,080. Buyers are at 1,020. This is definitely weird. These are already going back up a little bit, whereas plex is still going down. This is something that's very unusual. We usually see an extremely strong correlation between the multiple pilot training certificate and the pilot's license extension. And that is quite unusual. It is not something that stays for very long though, because these are effectively doing exactly the same thing. And so I do think that either plex or the training certificate are going to catch up to one another, just because you can usually by, I think, making both of them into Aurum, you can very easily go from a plex to a training certificate. And so this correlation should hold strong, and the fact that the training certificates are bouncing off of the 1,050 million mark could be an indication that plex is indeed going to bottom out and start going back up. If it doesn't though, then I think that the trading certificate is going to start going back down as well. So we'll have to keep a close eye on both of these in the next few weeks, because this could be very interesting. It's very unusual to see such a disparity between the two. Next up, we've got the pilot's body resculpt certificate, which is going down a little bit. I think this is normal. Contrary to Plexus and the training certificates, this one has actually managed to go up since the start of February. A possible explanation, of course, is that with the skill injectors, people have been remodeling their alts as well, since they could make these alts into something optimal that they've wanted for a very long time. PI character, a hauling character, a carrier pilot, something like that, may have gone with a nice little body resculpt just to get the exact character that they want. Now that form of customization was made available in EVE Online. As the hype of this goes back down, so does the price of the body resculpt, so does the demand probably for the body resculpt a little bit as well. You can also see the increase in volume here just before the skill extractor, skill injector, so I do think that this is part of the analysis. It could be that at this point most people have done their work on their alts, and so this is probably going to normalize back towards 220 million. That's my expectation. What could be really interesting as well are the skill extractors and injectors, of course. The skill extractor still going down, quite a bit of pressure on these, down to 240 million. Volumes are still pretty huge. I expect more than a front page of new ones, including 350, 209, 101. People are definitely using this as an opportunity to cash out from, let's say, Aurum into ISK, which you can also do through the process of just buying a plex, selling that one for Aurum, and then buying skill extractors and bringing those to the market. So I should maybe take a strong look at the correlation between what it costs in real life money to have a skill extractor, and then that's 234 million, and what it costs in real life money to get a plex, which goes for just above $1 billion. It could be that these two have something to do with each other. We'll see. Next up, we have the skill injectors, of course. That could be interesting as well. You can see that for just a few months that skill injectors have been on the market. These have been extremely volatile, starting at around 650, dropping down to 610, back up to 650. That is just in a matter of a few weeks, dropping back down to 610, back up to above 650, and now working its way back down as well, with a slight hint of going back up. But as I've said, with the idea now floating around that the reward for daily quests or daily activities in EVE Online could be skill points, this could actually put a bit of pressure on the skill injector market. So it's pretty interesting. I would definitely like to check out the correlation between skill extractor prices and plex prices in real life. That could be a pretty interesting one, in my opinion. But there we go. I think that I just need to do a bit more homework about the skill point market, especially with the impact of this new idea that CCP is going to test pretty soon and is planning to launch right after the Citadel expansion. Next up, as always, we'll check out the minerals. 835. Let's take a look at these. Maybe the war can show us something here. Strangely enough, the tritanium is going back down all of a sudden, quite sharply, I must say. The tritanium managed to get to a 6-month high at almost 6.7 ISK, and from the supply demand situation, I thought it might have more legs. Then this might go up towards close to 7 ISK, but nope, it's actually going back down quite substantially towards 6.3 ISK, which is still not that bad. It's definitely on the average, on the high side of the average that we've seen tritanium at in the last 6 months or so. So is it supply? It could be, but it doesn't look like it's going to last that long. Take a look at that, 1.7 billion? Yeah, billion, 1, 2, 3, no. Yeah, billion units being brought, 1.4, another billion here. But on the demand side, look at this, 2 billion, 2 billion, 2 billion. This could be tied to the war, I think, because a lot of super capitals in production are being destroyed at the moment. A lot of stuff is being destroyed in general. And so these might be numbers that are needed to rebuild some of these very specific hulls, super carriers, titans, whatever. So this is pretty interesting. Demand is very high. I'm seeing so many orders of more than 2 billion coming in here in the last 24 hours or so, trying to pick him up at 648, 638. These are of course attempts to pick up titanium as it goes back down. They're currently selling for 651, but the supply is pretty decent as well, of course, but quite a bit lower. So I definitely think that the chart is now at 630. We're actually going to bounce back up a little bit quite smoothly towards 6.4, 6.5. And then the question is, of course, does this demand keep up? Does whoever is trying to buy these big chunks of titanium really want them? And is he going to put up even more orders, pushing the price back up above 6.5? Then yeah, titanium could definitely have legs to go back up here once again. That's pretty interesting, a pretty sharp correction in the price, but a really massive jump of demand in response to that. Next up here we've got pyrite also correcting back towards 10.8, which is towards a 6-month low. Pyrite was under pressure last week a little bit as well. So 1081 for the buyers, 1086 for the sellers. When it comes to volumes, not that many sell orders less than 24 hours ago. They're also pretty small, 50 to 20 million. We've got 130 million on demand, 100 here, 100 million here. So at this point, I think that a lot of people do want to cash in by buying some pyrite because we are approaching a 6-month low. If you can pick it up below 10.8, if you look at the rest of the chart, it's a pretty damn good investment. So I think that pyrite is also going to start to go back up from this point. Let's take a look at the next one here. We've got Mexalon, also a sharp decline here in the price when it was trying to go back up towards 64, 65 ISK, something like that. It is pretty interesting that all of them are dropping back sharply. It could be like a possible scenario for this is that someone cashed out on pretty much all their mineral investments, causing a big glut in supply. But if it's only one player, let's say, then it could be something that is absorbed in a matter of a few days by the market, and so that the normal forces will start to take back over here. What's interesting is we do have a full front page of Mexalon sell orders coming in. Up to 50 million units, a couple of them. On the demand side, you don't have that many new buy orders. You've got a few optimistic one trying to buy at around 60 ISK for 250 million, and then you have 126 million at 60.66, which is bound to be filled, I think. Yeah, which is very close to 61.64. So this could get filled, but yeah, most of the volume coming in is very optimistic, trying to pick up some Mexalon at 60 ISK, but the market isn't letting it happen. So this will once again, I think, start to bounce back up as demand continues to increase here. This one order is making that pretty likely, because just this one buy order pretty much makes up for all the volumes in the top half of the page here in sell orders. So there is a good chance that Mexalon will bounce back from this as well. Next up here we've got Isogen. This is quite a different chart from most of the other ones. Most of the other ones had a little bit of variation. Isogen has gone pretty much straight down from 127 ISK, something like that, down to 95 ISK, breaking 100 ISK without too much effort. There was some hesitation right here, but after that, no, back down towards 95, which is basically going to become the new support. And the buyers, they want to see Isogen even lower than that. They're buying at 92.51. There are buy orders, but 10 million, 6 million, 21 million, which is actually an older order at 92.3. They're definitely still trying to drive the price down. As supply though is drying up, we just have one sell order at 17 million units, but not that much coming in the last few days and even weeks here. So Isogen just doesn't seem to be in demand, but from this chart's perspective though, very interesting, maybe as a potential investment. 95 ISK, I think it's a pretty decent price for Isogen for a longer term investment. Once again, you're seeing that it's not just supply that's not coming in, but it's also demand that is just not there. They're trying to pick it up at a much lower price here. So these are probably optimistic orders trying to really buy this Isogen at a very cheap price as a sort of an investment. And so it could be all right to start stocking up on some of the Isogen available on the market here. But again, this isn't very high as well, so be pretty careful with that. the margin between the two is surprisingly high for a mineral that is at a very low point. And so that to me indicates that it may be a little bit more than just the market. It may be someone really trying to drive the price down by not buying it, by specifically not buying it, because yeah, on such low volumes in the demand, it is surprising to see Isogen go this low. But it's interesting. I think I may want to put some ISK in this at this point personally. Next up, we'll take a look at some of the Nulsic ones. Let's start here with Zydrine, which, well, a 1 year chart is going to give you a bit of a better idea. Went up, of course, extremely sharply at the mineral rebalance a bit over a year ago, went up to 1600 ISK, then a really sharp decline as well, with the bottom at 900 ISK, back up to 1400 and then back down. This is actually pretty interesting for longer term investments, but timing this market has been pretty difficult. I never really said with any confidence at this point that yeah, you should buy Zydrine, because this is a really good bottom price to pick it up on. So it's always been difficult for me to actually gauge this, but such variations, and actually pretty sharp variations, can make you quite a lot of money. Of course, at this point Zydrine is on the way back down a little bit and is actually flattening out at 1150 ISK, and so it could be that it's done now, that the market is finally trying to find a reasonable price for Zydrine where it could stick in the foreseeable future. This also seems to be like pretty much in between the bottom and the top that we've seen right here, which was probably because such a sharp rise here at the tail end, which was probably due to a lot of speculation trying to cash out on some of the Zydrine stocks that they still had left. And now 1150 actually seems like it could be a reasonable price for Zydrine in the foreseeable future. Supply demand on this, is this starting to finally balance itself out a little bit? We still see almost a full front page of new orders, including 6 million, 4 million, 3 million. On the demand side though, look at that, 300,000. You have to go down quite a little bit to below 1100 ISK to find an order of 3 million units. So I think that there is still pressure on the price of Zydrine, but there is also a sign on the chart that we are starting to stabilize. So if this means that it's basically the sell orders that are taking over the market, people are basically not selling to buy orders anymore, but people are, everything is putting their Zydrine on the sell order, and people that need it just basically come straight to the market and buy it. This is the old dynamic of Zydrine. If that one takes over, then we are in for stable prices, and the chances for investments and making money in the Zydrine market may be over if the supply demand difference can actually still do its thing, bring the price back down. Then we could be up for another run. We'll have to wait and see. Megasite is showing something completely different. It's actually continuing to go back down here, breaking the 1100 ISK mark. So they're selling at 1087 and they're buying at 1072. Really, again, an unusual situation is that Megasite is lower than Zydrine. This is pretty unusual, and in my opinion is an indication that we could be in for another run, because at some point I feel like Zydrine is going to have to catch up to that difference between Megasite and Zydrine, and as a result we may see another run back down, followed by another spur back up to try and find this balance. It's really strange to see how this market has not been able to balance out, find a normal price range. This is just rife with speculation, with highs and very low lows as well. And we're again approaching that 1000 ISK mark, which was clearly a bottom last time. And you're buying them for 1072. It's still a little bit above the previous bottom, but it's definitely starting to become interesting, I think, as well, to maybe invest in some of this Megasite, especially if you see that Zydrine is going above that one. So that's for these. Yes. We finally have Morphite as well, the Tech 2 mineral that can be mined normally, bouncing off of pretty much 10,000 ISK. So this is another chart that you like to see, of course, as an investor. Pretty much 6 months of going back down, but looks like once it broke 10,200 ISK, Morphyte may have found its bottom and then went back up towards 1040, but the pressure is still on for this. I think if you're looking to invest in Morphyte, this is probably a good price, but this could again be a pretty long-term investment. Don't expect a turnaround in the upcoming weeks or months. This is something you need to hold for a much longer time before you'll be able to cash out at a decent profit. Supply demand could be interesting. Less than half a front page. 400,000 to 200,000, pretty much the averages here. On the demand side, you've got one order of 200,000, but you have to go a bit lower for 500,000, which is trying to pick these up at just 10,000 ISK flat. So there is still some pressure, I think, because the supply is a bit higher than demand, and so this may not be the actual bottom, but I think the fact that from this price point here, volumes went up a little bit, so did the price. This is probably people that are actually buying this Morphyte as an investment for the longer term, because it's decently timid, but people are definitely picking up everything they could below 10,200 ISK for Morphyte. So the pressure is on, but so are the opportunities. I'm actually seeing in general in the mineral markets several of them that could be interesting as a store of value for, as I've said, medium to long term. Don't expect this to turn around on a dime in a few days or weeks. That doesn't really happen in the mineral market very often, unless CCP changes something to the game. Let's take a look at the impact on some possible Take 1 ships, 2130. For that one, let's start as always here with the Armageddon going down in price quite drastically on the chart here, heading towards 200 million. That's quite unexpected considering that we were empty of Armageddons throughout all of this period. There were maybe 5 or 10 of them available on the market. Have people start to bring them in? Yes, they have. This is pretty interesting. It could be that this is related to the war. It used to be just basically, I think, the bottom 4 orders or something like that. Maybe the bottom 5 orders actually may have been just the ones that have been here for a pretty long time. Then 5 days ago, someone did bring in another 31 of them, trying to sell them just below 210 million ISK. But now supply is coming in here, and it could be that Armageddons will become a fleet that may be used, and people are anticipating on that and just trying to bring Armageddons to the market that may at some point be picked up by one of the alliances that are fighting the war in Nullsec at the moment. I think that this is the move, and the surprising effect is that it means lower prices for Armageddon. So I think that people are jumping the gun a little bit. They're expecting the Armageddon to come back, to make a bit of a comeback in Nullsec, and thus they're producing them, bringing them to the market, trying to cash out on this already, but putting pressure on the price. So it may have been just a little bit too early to bring all of these Armageddons to the market, guys. Next up here, we've got the Caracal. Actually managed to drop back down. Just look at the volumes on the Caracals, though, pretty huge. This is, of course, related to the Nullsec wars. The Caracals are very good ships for newer players to actually get them into fleets, get them into the fights. And so this price spike on the increase in volume is something that happened at the start of the war. I think a lot of people were actually surprised by the war actually kicking off with a lot of fireworks and a really big battle. But by now, I'm guessing that supply is able to start to catch up to this and is actually able to supply the market for enough Caracals that it is coming back down towards normal price of around 12 million ISK. Still a little bit above that probably. Nope, the seller's actually 11.8 ISK. So again here, be careful that you're not overproducing, because if that happens, we could actually start to go really low in the Caracal prices. But it is also possible that the alliances are waiting for the price to drop back a little bit before buying whole fleets again and moving them to their staging systems, and thus we could be in for a rough ride when it comes to Caracal prices if you're interested in buying. If you make these, then it could be good to actually hold off a little bit on your supply and wait for the next sell opportunity, which I think is bound to show up as long as the war keeps going. Next up here, we've got the Dominics really going back down in price as well. So people, you know, going down in price here again, which means that there's bound to be a lot of supply coming in. There's not that much actually. Look at that. It's on very low volumes that the price is going back down. So, okay, I'll give this the same analysis as the Armageddon. People expect that maybe the Dominics could become a thing in Nosec once again, start to produce them, bring them to the markets, supplying a bit too much right away, and thus the price is declining. I was thinking what could be happening as well is that some players from Nelsec that have been forced out of their homes are evacuating their assets to Cheetah, and thus now they are maybe trying to make some liquid ISK out of those assets, and thus they're bringing their reserves of Dominics of battleships to the markets, causing the price to drop to actually a 6-month low. 190 million for the Dominics is a 6-month low, not by that much, but it is to be noted here that we have been hovering around 200 million for 6 months now, and now here all of a sudden on not that much new supply going back, breaking that trend and down to 190 million. It's surprising. It's surprising that this would be the effect of the war, but it could be just because battleships have not been in the meta during this war so far. Next up here we've got the Drake, went up quite substantially as well, but is recovering. So this is pretty much a mirror of the Caracal chart, which I think is pretty normal. If you can get people into the Caracals a little bit later, you'll be able to bring them into the Drakes. They're not the best platforms, but they're pretty cheap for what they can do. And so I think that, yeah, this could just be some Drake fleets preparing or forming up in Nosec at the moment. So I'm not really reading too much into this. You've got decent supply coming in, and it may just be that again a Nosec entity is holding off a little bit, waiting for the price to come back down before they pull the trigger on another fleet. But this increase here with the increased volumes right here is bound to be Nosec related. Next up here we've got the Mauler. This is pretty interesting, managing to hold on around 12 million ISK. What is surprising to me is you can see several volume spikes right here without a corresponding price spike. So that I think means that supply is managing to keep up with all of these, even with all the variations, and that people are willing to plug gaps very, very quickly on the Maulers. I think they're not that used in Nosec at the moment, and so as a result the price of this one has managed to stay pretty stable. Next up here we've got the Myrmidon actually trying to shoot up here once again. Is this data point a real indication? Yeah, 66 million for a Myrmidon. That is definitely not bad. Volume increase, not that notable. There is 1 day exception, but the rest of this is pretty much okay. So I'm not necessarily attributing this to Nosec, to be honest, and this is a great opportunity to bring some Myrmidons, make some Myrmidons, and bring these to the market at a pretty good price of 66 million. I don't think that this will last for very long, but because look at that, full front page of new ones, including 53 and 15 of them. Yeah, this is going to put a pressure on this chart to go back down very quickly, but this is, I think, your very short-term production and sell opportunity. The Myrmidon is looking pretty good for that. Oracle tried to go up towards 95 million, but is being squashed here once again, going back down to just below 85 million, which is an okay average for 6 months. So this is still pretty stable. I'm guessing that some Oracle fleets may be produced, so you can see this price spike here and here could be due to some fleets building up, but it's not like it's part of the main fleets at the moment. Actually, in Nosec, a lot of people are flying Take 2 ships, and so the Oracle here, pretty much a flat chart if you look at it on 6 months. So it's looking quite alright to stay stable. Availability quite decent as well. Nothing too not too available. I mean, a few fleets of these and we could be out of them very quickly, pushing the price to 92 million without too much effort, but they are being brought, they are being produced, and so it's doing alright to stay stable. Next up here we get the Raven, again a battleship, dropping back down towards 180 million, slightly up in volumes. Let's take a look at the supply here. Well, nothing too drastic though, that's what I find weird. Sure, you get a few sell orders a few days ago of 18 and 13 of them, but all of these are being sold in smaller volumes. I'm guessing that the daily volumes of around 50 on average means that when someone brings 10, 20 more battleships to the market, they're actually crashing these prices, and so there could be two things happening. People may be anticipating battleships to come back, bring them to the market, but considering this is the third battleship that I'm seeing declining in price like this, I'm more inclined to start to think that this is due to some nullsec people having evacuated their assets from nullsec to JITA, and they're just trying to sell some of their battleships while they still can. Next up here we've got the Stabber. Again, some Stabber fleets are being flown, I think, but managing to maintain a decent price here, actually slowly going down as well over 6 months, heading towards 10.5 million. Supply, yeah, availability not that high, but again, very quickly someone is bringing 34 Stabbers to the market. So they should be able to keep the Stabber market in check, I think. Next up here we've got the Tornado. Quite a bit of volatility at the tail end here, but we're back to 74 million despite the bigger volumes that have been happening. So this again indicates that I think the Tornadoes are not used in huge numbers of like 2-3 Tornado fleets on the field. No, they're used more in very specific cases, like high-sec ganking, for instance, or a few sniper fleets here and there. But supplies managed to keep up with those as well, and thus we are at an okay price. I think 75 million is actually a pretty low point for 6 months if you look at the rest of the chart. Next up here we get the Typhoon, actually not going down, so I'm guessing that whoever is bringing all of those battleships to the market did not have a stock of Typhoons left, but these are just holding at 180 million. Slight uptick in volume to be seen right here, but it's nothing too drastic. Not a sign that the Typhoon is making a comeback in nullsec right now. So yeah, alright, stable for the Typhoon. And finally we have the Vexor holding on just below 12.5 million, which is decently high. Not that much to be seen in volume, and availability of this ship, yeah, pretty big actually. 200 of them coming in right here, 23, 27, that's 280 Vexors being brought in just in less than 24 hours, which is pretty much the daily volume. So supply can keep up with demand, except of course when the nullsec guys start to make their moves, and that's for instance when you get something like this Caracal chart. Big price spike, big volume increase, and of course the industrial response bringing the price back down. So it's pretty interesting. I also got a list of ships for possible battleships that may be used in the near future in the war, as maybe some of their stocks of Tech 2 ships come out, but I'll check those as the war progresses. I don't think that I want to jump the gun on all of this too soon. Next up, Tech 2. This could be more interesting. 3220, because at the request of a viewer I added a few interceptors in this. So I dropped the one assault frigate that really doesn't seem to be a good market at the moment, pretty much being replaced by something way better, the tactical destroyer. So I added a few interceptors. Let's start with the usual. Here we've got the Basilisk, which went up to 250 million, is now going back down quite drastically. So I do think that this increase in price here has been related to the war. Because of the new sovereignty mechanics, you need smaller fleets that can actually hold the field, and thus these logistics cruisers become pretty important in those. But dropping back down very quickly, very drastically, currently selling at 198 million, buying at 191. Of course the actual bottoms is close to 180. But if you expect more swings, then this could be a good time to move in on some of the Basilisks. But be careful with that. You never know when all of a sudden they start to move in to Tech 1 ships, to Tech 1 fleets for the nullsec war. That can happen at any time, of course. Cerberus should be pretty popular, yes. Went up extremely high to 270 million with a bottom of 170 million. That is definitely not insignificant. You can see the volume increase as well, which has basically stalled the recovery of the price quite heavily. We are still at around 220 million probably. Yep, 218 for the sellers, 210 for the buyers. So this is more an opportunity for people that can produce the Cerberus, not for people that want to make trade deals on this one, because well, we're still above the entire chart for 6 months here in the price, so we're nowhere near a bottom. You can still maybe try to sell a few if you still have them lying around, but you're not going to make those Twitch trades, which, well, right at the start of the war here, you could have picked them up at at 200 million. A few months back you could have picked them up probably at 190, 180. Then of course this spike here is huge money to be made, but because the war is ongoing, the Cerberus is a very popular ship. It's just not going to go back down to anywhere near those levels anytime soon. Here's the first interceptor, and this is the Claw. Obviously, there was in the news that Goons lost thousands, I think, of interceptors, always like 1,300 of them or something like that. All of that needs to be replaced. Interceptors are being flown very actively in nullsec at the moment, and thus you get again this price spike right here, which is actually lagging behind something like the Basilisk's spike, which was a little bit low and gradual. Here is the Cerberus spike, happened right here. The Claw spike, yeah, pretty late. So you had several buy opportunities at around 18 million, and then a sell opportunity at 34 to 36 million, almost a doubling in price here. Pretty crazy. We are going back down a little bit at the moment, but they're still selling at 23 million, buyers at 22 million. So people are willing to pony up quite a bit of money for a Claw at the moment. Extremely good, of course, if you can produce these ships. For the investors among us, which is why I tend to take a look at the Take-Two market, it is a bit too late, unfortunately. Next up here, we've got the Guardian, again also going back down after reaching 160 million, managing to maintain that for quite a bit. The bottom I'm personally looking for, of course, for an actual investment in the Guardian is 130 million, so the buyers are still at 139. We still have a ways to go before we reach that, but the first signs that this is going to calm down a little bit are here. If you are in the know of the nullsec wars and you, for instance, read about several fleets with logistics being lost, then of course you may want to make your moves on this. It's not outside of the realm of possibilities that volatility could pick back up if some major fights happen and a lot of logistics are destroyed. But for me, this remains a gamble. If I see the price of Guardians on the chart heading towards 130 million, and I can see that you have buy opportunities below that, then that's basically a no-brainer, considering I've been checking this for so long. But if you want in on trade opportunities short-term, for these ships now, you need to be in the know when it comes to the war, when what's being flown, what's being lost, what's being used. All of that stuff is extremely important at this point if you want in on some trade opportunities for the Take-Two market. Next up here we've got the Hound, which, well, is doing really well. The volatility in stealth bombers started quite a bit sooner. You could have bought them for 17 million. Look at that, 1, 2, 3 spikes up to like 28 million. This is actually the highest yet. It is slowly coming back down here once again, but this was a good opportunity to invest in right here at 20 million and at 18 million. But again, it remained pretty risky considering you could have bottom quite a bit lower, but the volumes are up, and so the price volatility is very high in the stealth bombers at the moment. Next up here we've got the Ishtar, finally dropping back down a little bit. I don't think the Ishtar is really something that is being flown that actively in nullsec at the moment, so it's good to see it recover a little bit, because it was, despite that, it was reaching 6-month highs right here at 200 million and 195 million. Currently they are selling for 171, buyers 158. The bottoms, yeah, probably close to 160. This is almost alright to buy the Ishtars. If you expect at some point to maybe one of the sides to start fielding some Ishtar fleets, then this could be a good opportunity. Of course, you can actually buy them below 160 million already with some aggressive buy orders right here. In fact, someone is doing that with 25 of them at 185.2 million. So this could be interesting because of the sharp drop here. If you're lucky, which I don't have any knowledge about, but if you know that at some point Ishtar fleets may be fielded, then this could be a good investment already. Next up here we've got the Manticore, very similar to the Hound here, spiked up to almost 34 million, going back down to 26 million now. Again, you want to look for, my historical bottoms have been close to 20 million. We're nowhere near that at the moment, 23 million for the buyers. So it is risky, but yeah, this is of course all this volatility and this pumping up, this jumping up from like 24 million is due to the war. Next up here, we've got the Nemesis, again, not as volatile as the other ones, but managing to work its way up to 28 million and also on its way back down here, increased volumes due to the war. Next up here, we've got the Oniros. This one is very unusual in the sense that it's a logistics cruiser that I don't think is used that much. I think some of the other ones are actually playing favorite at the moment, but look at the opportunities when it comes to making money on trades on this beautiful 6-month chart. We come from a high somewhere around here, I suspect. We went down to as low as 145 million, still opportunity at 175, breaking 145, 175 again, going back down to 160, a bit more timid, but jumping up to 180, dropping to 150, back up to 170. In this chart, a lot of money is being made and lost, and if you learn how to time this correctly, this is incredible, right? This is just great. This is the holy grail. This is why I check the Tech 2 market. Watching all of these swings happen in a span of 6 months, this means that you could have made a lot of money on the Oniros if you were willing to take the risk. Next up here, we've got the Purifier. Again, of course, increased volume, big increase in price up to 30 million. At some point that ends, of course, when supply starts to come back to the market. And so here we are dropping back down. But the stealth bombers, I have once again at around the 1st of April known a big increase in volumes, big increase in price, and were a great opportunity if you had them lying around, maybe from earlier, bought at below 18 million, selling at 30 million. Yes, please, that's a lot of money. Next up here, we get the Raptor, the other interceptor that was requested, very similar to this one, to the stealth bombers and the claw, of course. You could have bought these as low as 20 million, you could have sold them for above 40 million, is doubling in price here once again, huge volume increase. So it looks like what's being flown at the moment are interceptors, stealth bombers, small nimble ships. The meta in EVE Online is of course something that keeps rolling around, right? They just need to find a good counter to these ships, and then they may start to eat. The fleet composition may start to move to something that actually counters this. What could do it? Maybe tactical destroyers could be a thing, maybe just straight up Tech 1 destroyers. I'm not really sure if that's going to be able to be nimble enough or anything like that, but it is interesting. It's pretty obvious that stealth bombers and interceptors are what are being used quite often in the Nullsec war at the moment, and the corresponding price spikes are absolutely huge, especially in the interceptors. Next up here, we've got a scimitar, bottom 120. That was extremely low though. I usually tend to look at 130 as a great opportunity. You saw some volatility taking off at 140 up to 170, back down to 140, back up above 170, and now going back down here once again. So for the logistics cruisers, they all seem to be coming back down just a little bit, and I think that we need like a really big battle with a lot of fleets lost for these to actually make another jump up. But it is possible that it will happen, and so it's all up to you, of course, to decide where you want to put your money. But the war brings volatility, which of course brings opportunity as well, and at the moment a lot of that is in the Tech 2 market. Let's move on to the Tech 3 market then, 42.45. It's gonna be a pretty long episode this week, but with the war, of course, there's a lot to discuss. So let's start with the tactical destroyers. To my surprise, they're managing to stay quite stable at around 50 million here, and supply is, well, pretty good, right? There's still a few of them coming in the last 24 hours. There's really big orders still hanging just a little bit above this price range, so they just don't seem to be bought that much, 100 to 200 of them being bought every day. Those are not really fleet numbers, I don't think. Considering a lot of individuals, low sec people may be buying these, and so yeah, so to my surprise, these tactical destroyers are holding on at pretty much a 6-month low, and they're managing to maintain that. Is this an opportunity? It could be, but again, it is a bit of a gamble. You have to be in the know. Will at some point the Nullsec entities decide that maybe some tactical destroyer fleets could be a thing to use? Then of course, yeah, this could be a great opportunity. Next up here, we've got the Hecate. Also, look at that, breaking for 48 million, heading towards another 6-month low right here, and the availability pretty decent, right? We still have half a front page of new Hecates being brought in, to my surprise, with 83, 93, 76, 73. This just keeps putting pressure on the price, making these very affordable. And just look at the availability of the Hecate at the moment, quite huge. So yeah, tactical destroyers, maybe a good investment opportunity, but I agree it is a bit of a risk. You have to take that gamble. Next up here, we got the Jackdaw, went up from 46 to 48 million, but again, the pressure is on, probably due to supply. Yes, it is. It's not that many, but 19, 11, 10, 59, and 13 in the last 24 hours. That's just pretty big, and just it's more than what is needed at the moment, and thus these are slowly going back down. Now, in my experience, at some point this will change, but of course, how long will you have to wait? Impossible to know beforehand. Here's this Zwepel trying to jump up to 52 million. Let's see if supply response is here. Yes, it is. This is reminding me of like a few years ago in the Tech 3 cruiser market, where there was just too much being produced for the market to handle. And here Zwepel went up by a few million, that's it. And just look at the sell orders in the last 24 hours. More than 2 front pages, 49, 64, 18, 54, 44. These are hundreds upon hundreds of Zwepels being brought to the market and still being brought to the market just because it is at 52 million, which is a few million more than the other ones. And the volumes are just crazy. The availability is really high as well. So we need these to get into the nullsec meta if you want these prices to start to go back up. It could happen, but it's a pretty big gamble. Because of course, with a lot of newbies, something like a tactical destroyer is not something you tend to put them in right away. So that's it. Big volumes in the tactical destroyers, keeping that price on under pressure at a pretty low point here. All of them hovering at 6-month low prices. Pretty interesting to see this dynamic come back. I'm guessing that wormhole space is pretty quiet at the moment, providing a lot of opportunity to produce these in massive numbers, and so this mechanic of oversupply seems to be taking over at the moment. Next up for the cruisers, we've got the Legion. You can see that it tried to go back up on slightly higher volumes. Some Tech 3 fleets are being flown in nullsec, so keep that in mind. And I think if it weren't for that, we'd be in the same position. Because Legion is going back down towards 170 million already. Yeah, actually 170 for the sellers already. Availability pretty high, full front page 14, 19. These are pretty big volumes for the Legion that are being brought to the market at the moment. Next up here we get the Loki chart. Look at that, 6-month low, 155 million for a Loki, and well, not that many being brought, but yeah, right here you still have 16, 22, 10 as the latest sell orders, or the top sell orders right here, putting that pressure on the Tech 3 price. This is quite surprising to me. Here is the Proteus, try to go back up to 200 million, market says no, back down to 170, and availability, yeah, despite that, look at that, full front, more than a front page of new Protei being brought in, including 11, 6, 4, kicking it off, 8, and then a lot more being brought here, 0.1 isking each other pretty much. So yeah, Proteus market under pressure as well. And finally here we have the Tengu, again 6-month low below 170, and availability, yeah, all of this less than 24 hours ago, all of this less than 24 hours ago, and huge availability on the market. Look at this here, 25, 25, 25, 25, 40, 25, really big volumes. So oversupply in the Tech 3 market seems to be back. This could change on a dime due to the war, but that is the thing that's happening in the Tech 3 market at the moment. Almost all of them at 6-month lows, keep that in mind, and big supply. So the trick here, I think, is going to be try to spot the bottom for these ships, because if an nullsec entity makes a move on one of them, you could see huge volumes and a great opportunity all of a sudden. That could happen in the Tech 3 market, but finding that opportunity is of course the name of the game. And then finally for the extra ones, 4830, I'm going to check two of them. I actually have a few sources now, which I don't want to name because I want to make sure that I don't make a mistake doing that. But they're actually keeping me up to date on what's happening in the nullsec war, and they're giving me a lot of tips of stuff to check that are related to that. So thank you very much to those two people that are actively doing that. I'm trying to absorb all of that information. It is quite a lot, but it is very, very interesting to see what you're bringing as information to me. And I'm picking two items. I'm picking the strontium, first of all, which is not really related to the war, but one of you guys mentioned these, that they've gone up in price so much. And this is, of course, a chart that you cannot leave behind. 500 ISK to 5,500 ISK. 11 times the price. That is, of course, pretty crazy. The reason for this is pretty obvious. This is due to the change in the fuel cost. Strontium has become a part of what you need in order to produce fuels, and so this is why we're seeing that. This is, of course, pretty crazy. Had I known, of course, oh my god, 500 ISK to 5,500 ISK, currently selling at almost 6,000 ISK. This was the investment opportunity early this year, I should say, but of course, who could have expected this? This is the power of CCP. Any changes they make can have such a huge impact on the market that it's pretty crazy. Fortunes are made here that are mind-bogglingly big, but it's just incredible, and I think it's really great to show this as one of the extra things that I want to check here. Yeah, you're too late, of course. Strontium is going at extremely high prices, but if you happen to have some stocks lying around here and there, which I'm actually lucky enough to do, I still have a decent sized stock from my wormhole boss into Dixie. Now that I mentioned this, yeah, that's pretty damn good. This has become 10 times what it was worth when you bought it just 3-6 months ago, a year ago. A very, very stable market that has just gone crazy in price. This is also very good news for ice miners. You're getting this from ice products, so these guys are, of course, dancing as well, because they're the ones that will have been holding on to these stocks, and of course they're the ones that are still producing this. So very, very good suggestion, of course, something I should have seen earlier on, but yeah, just crazy. Strontium markets, due to probably mainly the change in the fuel production cost, because just an added material. Could also be due to the capital changes that people may want to start using them. I think those are used to fuel these ships as well. So yeah, thank you very much for that suggestion. And then the other one, I'm actually going to go through the entire advanced frigates, the entire interceptor category. Since we have seen some of them double in price, I think it's worth it to do that, because basically all these interceptors are being flown a lot in the war at the moment. And here, for instance, is the Crusader. Look at the increase in volume, going from 20 million to almost 32 million on the chart, 50% increase. Here's the Malediction, starting at 20, ending at 27. Volume increase is there, but yeah, apparently the MR interceptors not really the most popular. Next up, we've got the Crow, going from let's say 21 million to 32 million, again 50% increase in price. Next up here, we've got the Raptor. You could say a bottom at 20, but let's be fair here, triggered at 25, went up to 45 million. That is almost a doubling in price from the very bottom, more than a doubling in price. So the Raptor obviously extremely popular. The volume increases are pretty crazy for these as well, of course. So this is the war in action. You've got CCP that can have a big influence on the market, but that is often very difficult to foretell. But if you happen to know about the war, then of course these are the changes in prices that you can take advantage of. And next up, we've got the Ares here, going from 20 million up to 32 million, again 50% increase in price. Here's the Taranis, starting at, well, that's almost 19 million up to 28 million, so a bit more timid here for the Taranis increase in price, but the volumes are there, the price increase is there as well. And then finally, we've got the Claw, which we checked before, 18 million to 34, 36 million, probably the winner from its actual trigger point here. practically double the price. Volume increase pretty crazy as well. And here's the stiletto starting at 19 million, no, let's call it 20, up to 27 million, so less than 50%, but not insignificant. The stiletto though, not that popular, just one big volume spike right here that has caused this, and it's already dropping back down. But yes, the interceptors are of course the ships being flown in Nullsec at the moment, and that's the result of that. So there you go guys, that's going to be it for ETH Talk this week. Thank you very much for watching, and I'll see you all next time.